Time for the Tesla and Palantir weekly update, and going to start off with Tesla. Also going to include some other charts like Coinbase, MicroStrategy, and maybe some others if we have time. So let's start off with Tesla here. And we can take a look and see that it did finally close another week back below the 786 on log scale here at the 306.93. But the one thing I've been paying attention to the most is the linear scale, really, because it's been very, very accurate since it really broke out, right? We can see after it held the 382 way back here from the big breakout back test, we can see that it just went straight up to the 786, the 347. And ever since then, it's just been bouncing back and forth between the 786 and the 618. So between the 295 and the 347, it's just been bouncing back and forth in that range. So really nothing has changed, right? And yes, we can argue that it did close the week again, finally below the 50-week moving average for the first time since it broke out basically right here in April 21st. So that is kind of a different trend change. But when you look at the fibs and when you look at the market structure, it doesn't really change that much. And Tesla is basically notorious for closing above levels, below levels, and then just going in the opposite direction later on just to get that extra liquidity down below or up above. So we see it all the time. Like even right here, we saw Tesla close above the 786, but it didn't mean it wanted to go higher. It just was kind of going to trap people up here, even back in the 360s until sending it back lower. So we're basically in a range, right? And the range is between this 295 and the 347. And really nothing's going to change that until either level breaks. So either the 295 breaks for more weekly support and it goes maybe lower, or the 347.58 finally breaks to the upside. And then we continue to the 370s and the 414s or higher. So there's really no change on this chart week over week over week. And essentially, if we just draw parallel channels right here on this chart and eliminate everything else, right, we can see it more clearly, right? This zone is an important zone. And we can even go back in time and take a look at what I mean. It's an important zone. So guess what? Right here in 2021, it was a major resistance, got rejected, went lower. Then right here, this zone was in 2022 was a major resistance, and then it went lower. And then guess what? In 2023, this was also a major resistance in July, and it went lower. So what we're really experiencing now is for a multi-year major resistance zone is actually breaking out and stabilizing inside of it for the first time basically ever. Right, we never really found stability in this zone for so many weeks until recently, right? Even right here, it wasn't really finding stability because it cut through that zone multiple times, and then it went up, and then it cut through it again. And then here, it was a very brutal, just slice right through it. But now, finally, that we recovered from the 220s down here, it's actually finding stability in this zone. So that's more confluence around that 295 zone, right? That zone is basically 294, 295, the low 290s in that zone. So I think this is the most important trend change on this chart. And when you combine that also to the Gann square that I have on my chart here on log scale, let's just take it into log scale, and we can see that this market symmetry is also very, very beautiful still too, right? It kind of has predicted and showed us the possibilities of every support and resistance throughout history for past, present, and future, right? The top was right here, the green level. And this arc right here was a major resistance. And guess what? Now it's a breakout back test that we experienced back in March and April that everybody thought it was going to go lower, but it didn't. It held. The arc held, the angle held. And I suspect we're probably going to stay in this range until it's really ready to break out. So what we could probably see is maybe just more range bound within this little triangle formation here until it's ready to maybe touch this angle one more time. Right, whenever that's going to be, it could be maybe the 290s, maybe a wick down, a flush down to the 270s, 280s is possible too, before trying to break out. But when we combine all this confluence, nothing is structurally broken. The market symmetry is telling you that. The previous resistances before in 2021, 2022, 23, it's showing that it's a previous resistance flipped to support. So there's really nothing to fear. And as long as this angle continues to hold as our support zone, I think it's going to break through this arc eventually to the upside and then go back to the 400s, maybe 460s, 470s again. So Tesla, it's just a waiting game in my opinion. And if you do not have any options, if you don't have any leverage, then you can just hold in shares. And if it does dip a little bit lower, maybe accumulate a little bit more until it really wants to break out of this little triangle formation and get more bullish. And next is Palantir here. And Palantir, I really want to show you this fib again. So it did get rejected, and we do have earnings in a couple days. I think it's Monday, right? That's when earnings are. And right here, we can just open it up. Yeah, Monday, August 4th, after the bell. So is it going to break free? Well, I would say maybe not, right? Maybe not. And there's a lot of confluence showing why not. So the first one is we can see the 1.618. It finally did get rejected there. It did not close a second week in a row above it. And it was really battling this whole week, so it's struggling. And because of that struggle, we don't know if it's going to break out this next week or not. And this basically had a big melt up ever since it broke all-time highs. It's been melting higher and higher and higher. So is it time for a back test for Palantir? And I think it might be, and I'm going to show you why, because I have actually a new Gann square that adds confluence to this resistance. And so let's just put that on here, right here. Here it is. Let's just take off that fib and we can take a look, and guess what? That Gann square got rejected right here at 160. So this one has been pretty accurate. I haven't really shown this one before, but I've been watching it myself personally, so I just wanted to share with you guys today that ever since the blue level here, breakout backtest, it just melted up. See, we broke out clearly of this blue level and backtested it clearly, so that led to the continuation higher. Same thing happened here. It broke out clearly with the blue or the green level here, backtested it multiple times, and then it took off. But right now, we don't have that, right? We don't have any kind of clear breakout of the green level. Plus, that's the 1.618 level as well, almost the exact same zone, right? I can add those fibs back on for you. You can see the 157 is just a little bit below that Gann box, Gann square. So I'm going to be cautious into earnings. This is resistance. And if this is resistance, where is it going to go? Well, let's just take off that fib one more time. And it could come back down to the angle here, which is 130s, 132, maybe even the arc here at 122. So if we're looking for a back test after a rejection, we could get to the 130s, 120s, stabilize in this zone first before attempting to continue the journey higher. So if after earnings cannot break above this and flip it to support, then we most likely will get rejected and go lower. So it's really crucial that if earnings are good, it flips this 160 zone from resistance to support. That is mandatory for continuation. If we don't get that after earnings, then I would be cautious because 130s, 120s seem more likely than not before continuing higher. And next here is Coinbase. And Coinbase, I just want to show you this log scale chart first, just to show you what we're really seeing. We did experience, if we just go to the monthly chart first, we did experience an all-time high monthly candle close. It's never closed a monthly candle as high as it did back in July, right? It was the highest monthly candle close ever. So that is a bullish thing to start off with. Also, it opened a new monthly candle above this 886 as well for the third month in a row. That's above it. So this is bullish as well. But when we break it down to weekly charts here, it did actually close the week back below this 318.95. So that's basically the zone I'm really going to watch the most. And it did close below it. So does that mean it needs to go all the way back down to the 270s, 230s, 260s, 240s? I don't think so. I don't think it needs to necessarily. And the reason why I'm going to show some confluence of support. The first one is the linear scale fibs, and that's basically the 702. So what I want to show on the 702 is basically this 310.94. It did break out. It did actually backtest it. It did actually wick and touched it already. Price went down to 310.55 on Friday, and it bounced, right? It bounced right in that zone. And this is an important zone, right? We can go in the past and see, yeah, it was a resistance right here, right? We can go in the past, it was like a V liquidity grab up, but then it got rejected. It was basically a big bearish engulfing candle right here, a rejection zone. And then it really was struggling throughout time to break out, right? It had a false breakout here back in December 2024, but now this zone where it never really closed that many candles above before, we're actually closing all the candles above it recently. And the past 6 weeks in a row, to be exact, we've closed above that 702, which has never happened before. So before we assume lower, we're going to watch this 310.94 zone as support. And also we're going to go to the linear scale GAN over here that I can show you that this chart actually was a breakout backtest of this zone as well. And this blue level was basically around 318 and it broke out finally, and now it's backtesting that zone. And this angle below is also what I'm watching. So during the week next week, maybe the 310 won't hold the whole time. Perhaps we're going to see some liquidity getting underneath that 310 and maybe even touch this angle or the arc below. So if we're looking for maybe like a max pain scenario, I'm going to watch this zone, right? Because before, this arc was a resistance, right? It was a breakout, backtest, then rejected. This arc, you can see multiple candles on this lower arc got rejected massively. So if we're looking for a breakout backtest of this bottom arc, then that would be right down here next week, which is around 285. So if we're looking for some kind of max pain scenario, that could be around maybe 300 to maybe 302 down to maybe the 280s, 285, right? That could be some kind of max pain scenario if we're looking at it. So we can go back to the linear scale and we can maybe open up the week up here, maybe just flush down, get some liquidity below, maybe even back to the 277 too, and just get all that liquidity below. But I think there's a good probability of actually closing the week back above that 310.94 and then continuing higher. So I'm not too concerned with this chart. It's more and more healthy from the bottoms. It's higher highs, higher lows. This is no different. It just had a massive higher high. So we're getting a bigger, steeper pullback than usual because of the violent move that we had to the upside. So let's just watch for stability, right? Let's see how the week closes. The 310.94 is always going to be the goal, but during the week, they could shake people out by getting more liquidity below, maybe going down to this 302, maybe 285, maybe even the 277. So that's basically the max pain zone of the 280s, 277 zone for Coinbase. I'm not going to really assume too much lower because this 618 also was a huge previous resistance zone in the past. So I don't think there's really too much more to fear on this chart. If you're talking about percentages from current price, how much of a percentage would that be? It would just be another like 11%, 12%. So that's not even that big a deal if it came, and it's not even guaranteed, right? We can't always assume lower when a chart is this bullish, right? It's a big breakout. It's a big back test, and it didn't even close that much below the log-based fib right here around 318.95. So that could actually easily get reclaimed as well. So because of that, it could go lower, but I don't think 240s is necessary. I think 280s, 270s at the most. But ultimately, that's just a maybe at this moment too, because there's a lot of support based off of this chart before any of the 200s at all, right? We still have this zone that can battle next week. We still have the angle there in the way around 301, 302. So essentially, it doesn't necessarily need to go lower. There could be a lot of support in this zone where this angle was, or where this angle is, because it did bounce there successfully before, multiple times, right? Even got some liquidity below and bounced in that zone. So Coinbase looks good, right? I think it's just going to spend some time consolidating. It's not ready to just completely break out yet, but I think what we're looking at is a nice retrace, which this volatility is going to help it continue the journey and explode into all-time highs later. So I would not fear any of these backtests. I think there are going to be opportunities for the potential to continue much higher. And next here is MicroStrategy. And MicroStrategy, we're going to start off with just the log-based fibs here. And what do we really see? Well, we see a consolidation of MicroStrategy between the 1.414 and the 1.618. So it already got rejected off of that 1.618, and now it's been consolidating between the 1.618 and the 1.272 down there for a long time, essentially since November of last year. So this has been a big, long consolidation. Is it really guaranteed to come back up to the 542 and break out? I think it's really likely, right? I think it's likely to break into all-time highs and beyond. And the reason why is it's establishing a nice foundation around this zone. But what I want to know is it really guaranteed to go back to this 340? It's not really that far away. 366, 340 is not that far away. So I guess anything is possible, but it had so much opportunity to do it before back in June, but it never did. So let's go take a look at my log scale GAN. that I have for this chart. We're going to take a look here. And basically, what do we see? Let's take off the fibs here and we can zoom in, right? Let's take a look at what really has happened. So ever since this blue level was a major resistance in the past, and then it went down to the 45-degree angle here, it just broke out, went to the green level, and then back tested the blue level and the 45, and then it took off, and then it was spent some time around that green level. But what we're experiencing right now is basically this is the arc that is trying to hold. And I think this is kind of the reason why we're not going back to that 340 fib zone, because it already broke out and back tested the bottom arc, and that bottom arc kind of aligns with that 1.272 fib right down there. That's why it hit that. But if we put these two together, we can actually visualize why the 340 has not been tested. It just broke out of the arc and has been riding that arc down as a support. And what we just saw last week was just a flush down to touch that arc again for another back test. So that's why it's not guaranteed to go back down to that 340. I mean, is it just going to trickle down this arc the whole time until they meet right down here back in April of 2026? I don't think that's really likely. If it is going to go back to that 340, it would probably just be one kind of a flush down, quick liquidity grab down there, and then recover and go up higher. So I'm really just watching this arc, and next week it's right around the current price, 365. So if price can really stabilize around these 360s here, then it really has the potential to continue the journey higher, and then after that we could actually see the continuation back up to this 1.618 and then the green GAN level up here, which is around 850. So that's going to be my next target zone, the 500s to the 800s up here, and whether or not it needs to test the 340, it doesn't really matter to me. But this is bullish, right? It's a breakout. It's a back test. Just like we saw all through 2024, it kept on back testing the green level and the 131, the previous high back in 2021, right? It kept on back testing it, getting liquidity below and retesting that 886 as well. So you know what? This is bullish. This is bullish. So let's just watch 360s. If that holds, then 340s is not guaranteed. And if 360s do hold, then we can continue the journey up top. And I will do one more chart for you guys. It's going to be Robinhood. So let's take a look at Robinhood here. What do we see? Well, Robinhood, it is a breakout, right? It's a breakout from the 2021 high. And could we have to back test that at $85? And the answer is it's possible, right? It's never a guarantee to just go straight up like it has been. And that's basically what it's been doing, right? It just shot straight up in the air. And it got rejected. People are like, well, why did it get rejected there? There's no fib extension up there. Well, if you go to linear scale, actually there was, right? There was a fib extension up there, and that was the 1.272, the 106.27. So it did close 1 week above it, but that was just a liquidity grab fake out, and it has not been able to close any weekly candles above there since then. So linear scale is useful in that regard. But now the question remains, does it need to go back down to the $85 zone, or can it just stabilize around current price? Well, I got a couple of GAN squares to show you here, and the first one is kind of in confluence with the log scale fib right here. And the reason why is right here, right? We can see that this is the blue level right here, which almost lines up perfectly with the 85. And guess what? Where did price get rejected? That's right. It was the 45-degree angle and the top arc a couple weeks ago. So it was a perfect hit. So if it's a perfect hit, then we might need a perfect back test, which would be right in that $84, $85 zone. So does price need to go back down there? It's looking like it's possible, right? It's definitely looking like it's possible. But there's also another GAN square I wanted to show you right here, which is essentially it just hit the top arc, and now it's just consolidating in between these arcs. So there's confluence of support around this $93, $94 zone. So maybe price could just do something like this for a little bit, just stay in this little arc formation until going higher. And then the next level up here is in like the 160s, maybe 165, right? That's a possibility. And also that 165 is right next to the 1.272. So there's a possibility that this GAN square is telling the truth, that if it can hold, then it doesn't need to go back down to the 85. So we're looking at 93, maybe down to the $91, $90 zone, right? If this can hold, then we can just consolidate for a few more weeks inside these arcs and then continue higher. But if this arc starts to break, then there's a potential to go back down to that $85 zone that I showed you. And maybe if there's a liquidity grab, maybe even this $74, $75 zone too, which is the green GAN level on this scale. So there's good developments here on Robinhood, but it looks like consolidation is in order. And no matter which chart I show you, it looks like it's not ready to break out higher. So let's just be cautious here. There's no need to rush for Robinhood. It already had a huge melt up. So let's just see what price does over the next couple of weeks. If it can break out, then we can talk about higher levels. But if it can't break out above like the 106 zone, then we'll look for more consolidation, maybe down to 85, maybe even a liquidity grab down towards the 75 zone before it really wants to continue its journey up to the 168. But either way, even if it wants to consolidate lower or not, still the 160s are the likely target after it's done.